The average American is going to purchase 13 vehicles in their lifetime, and they're going to spend roughly $400,000 on those vehicles. Now, whether you pay cash or finance those vehicles, at the end of that time frame, you will have $0 left over. Because Nelson Nash, in his book, Becoming Your Own Banker, identified a problem. And that problem is that you're financing everything in life. You either pay cash and give up the interest you could have earned, or you borrow from someone else's bank and you pay them interest. But either way, the money's transferred away from you, and you're doing all the work, but someone else ends up with all your money. And this is why we need to have a mindset shift and change the way we think. If we can think more like a banker, change where we save our money, and then move our money the same way a bank would for something we were going to do anyways, which is purchase vehicles, we can take the same amount of dollars, this $400,000, drive the same amount of vehicles, 13 vehicles, and end up with $1.5 million at the end of our lifetime. Same exact situation, very different result. And this is a major paradigm shift for most people to think like a banker. But this is exactly why you should be the banker. This gives you such a serious advantage in the money game. Now let's hop over to the Truth Concepts calculators and take a look at how this is working. Okay, we've got a borrowing strategy pulled up here, and we're going to be taking a look at the average American driving these 13 vehicles and spending roughly $400,000. And we do all the work, and we know the banks end up with all of our money. Now, this is why you need to have that mindset shift and become the banker. So we are going to take a look at putting some dollars into this new savings environment, which is our insurance policy. So we're going to be looking at a 69-year time frame. And I put in these numbers to equal exactly what the average American is spending on vehicles in our lifetime, which is $400,000. So if we look at the premium column, these deposits going into our policy, this is our savings vehicle, total $300,820 in premium. Now, if you have policies already, you know that your premiums equal cash. You want more cash, put in more premium. Next, we are going to be looking at financing 13 vehicles, paying them back over a 5-year time period at a 7% interest rate to our banking system. And we're going to start that in year 4, which is what you're seeing here. So the total loan repayments are $475,587. Next, we need to subtract now the policy loans we took out for the vehicles, which is $390,000, which will give us our net injection. So we're going to add $300,820, which is the premiums, plus the loan repayments we put in, minus the policy loans we took out. So if we have $300,820 plus $475,587 minus $390,000 gives us a net injection of $386,407. So we are just under that $400,000 threshold. So we're even giving ourselves the benefit of the doubt. We're not even spending as much money on those vehicles. But look at our cash value at the end of that time frame. We've financed the 13 vehicles. We've spent almost the exact same as most Americans are going to spend on their vehicles. But we have $1,511,141 in that account. That is the exact same flow of money, but it is a drastically different outcome because you did a couple of things different. You changed your savings environment, so the return on your cash savings is increased dramatically, and you never interrupted the compounding growth of those savings. Okay, this is about controlling and harnessing the power of all of those savings dollars that you would have used for vehicles. You just kept them in your control in a private, tax-free, guaranteed environment. Look at that outcome. Now, this is where the stewardship and the leadership conversation comes into play. Someone in your family has to recognize that this is the opportunity or interest cost that you are losing by not building a family banking system, and keeping those vehicles inside your family. So, as a parent, you should be looking at your children as potential cash flow sources for you. They're going to spend this amount of money. Do you want a bank to get that money, or do you want to become the banker for your family and build an actual relationship with your children that can actually help them appreciate and love and support the family around money, as opposed to what it normally does in most middle Americans' families, which is it separates the family. So this is an opportunity for you to build something that has not existed before and become the leader of your family to implement this so that you keep a lot more cash in the family, and then you're able to transfer it to the next generation tax-free.